we'll be proceeding up with the retirement benefits. So there are a number of retirement benefits that are available to an employee whenever he is at the verge of his retirement and whenever he is retired. So the very first retirement benefit that an employee receives from the employer is the gratuity. Gratuity is the benefit with respect to the services that an employee has given to an institution. So the employee that has given all those precious years to an institution, so in renderance to the same, in consideration of the same, he will be receiving the gratuity from his institution. Now when we are talking about gratuity in case of your government employees, and when I say government employees, in case of your gratuity, government employees refers to your central, state, local authority employees. Now all these three segments of your government employees, in these scenarios your gratuity will be fully exempted. So whatever amount that they receive, all these sort of your government employees, whether being it a central government employee, state government employee or a local authority one. So the amount that they receive as gratuity at the time of your retirement, it will be fully exempted. Similarly, in case of your non-government employees, now we will be categorizing them into two segments. That means the employees that have been covered under the Gratuity Act 1972 and the employees that are not covered under the Employees Gratuity Act 1972. So first we will be taking up the category, that is all those non-government employees which are covered under the Gratuity Act 1972. So in this scenario, the exemption is being provided. That means there are certain limits, and as per those limits the lease will be provided as an exemption from the gratuity that a person receives, and if it being a non-government employee and that too an employee who is covered under the Gratuity Act 1972. Now whenever we are talking about the actual amount received, the lease will be exempted. That means whatever the actual amount that he receives from the organization, that being the first limit, second is taken up as the 20 lakh rupees, the fixed upper ceiling that has been given by the government, that will be forming our second case. The third one being your 15, that is the half month we are taking it up in this case, but divided by 26. We are just eliminating those 4 days of your holidays, and that is why we are taking up 15 by 26 and it will be multiplied by the monthly salary. Now here the salary means the basic salary plus the dearness allowance, and then it will be multiplied by completed years of services or part in excess of 6 months. That means, for example, a person has given the services for 25 years and 7 months. In that case, the number of years or the completed year of services will be taken it up as 26 years. But let us suppose the person has served for 25 years and 4 months. In those scenarios, we will be taking it up the completed year of services as 25 years. That means in case the completed year of services or the part it exceeds 6 months, then it will be counted up as in whole year, else that excess part which is less than your 6 months period will be eliminated. Now we will be taking up the example for the same. In that case we will be taking it up, let us suppose Mr. X, he receives 98,000 rupees as gratuity and he is covered under the Payment of Gratuity Act 1972 and he retires after 40 years of services and 5 months of services. Now in this case we have been given his monthly salary being the basic plus the DA component equals to your rupees, that is your basic is 3400 and your DA is your rupees 800 rupees. That gives you a summation of your monthly salary of rupees 4200. Now let us suppose in this case the person receives the actual amount as 98,000. So in this case what will be the amount that will be exempted for an employee who is covered under the Payment of Gratuity Act 1972? For this respective employee, The first case that will be taking it up, that being the actual amount that he receives. So the actual amount he receives is 98,000. The second limit, that is the ceiling that has been given under the act, is your 20 lakh rupees. The third thing being is your 15 divided by 26 multiplied by your this monthly salary, which is your 4200, multiplied by your 40. That means because it is 40 years and 5 months, it is not exceeding the 6 months period. So that is why we are taking the completed year of service in this case, which is your 40. So in that case, the third point, under third point, the amount that comes is your 96,923. So out of these 3 points that have been mentioned out here, the least will be exempted. So in this case, the least is being your 96,923. So that will be exempted from your actual amount that is received is your 98,000, and the remaining will be taxable for this Mr. X, who has received 98,000 as gratuity, and as he was covered under the Payment of Gratuity Act 1972. Now, all those non-government employees who are not covered under the act, that means all those employees, all those non-government employees who are not covered under the Payment of Gratuity Act, for that the limits would be redefined as number 1 being your actual amount received, number 2 being your 20 lakh rupees, that is a maximum ceiling under the act, number 3 being 1/2, that means half of the month's average salary, it will be multiplied by the average salary, then it will be multiplied by your completed year of service. Now when we say about average salary, what do we mean by average salary is, that means the salary that has been drawn by the employees in the last very 10 months before his retirement. So whatever amount that he is receiving as salary in the last very 10 months before he gets retired, that amount will be taken it up, and it will be taken up for the 10 months, and then in average salary for those 10 months will be taken up, and that average salary will get multiplied by 1/2, that is half month salary, and that too for completed year of service. That means if a person has given the services for 25 years and let's say 8 months even, in that case also it will be taken it up as 25 years. It cannot be taken up as 26 years, right? Because it is mentioned that here we have to take the completed year of service. We are not going to take any excess power, whether it exceeds 6 months or not exceeds 6 months. So in this case, the lease amount out of your actual amount received, your 20 lakh rupees, and the half month's average salary for the completed year of services will be exempted, and the rest amount will be taxable. The second retirement benefit that is available to an employee is your pension. Now, pension further, it can be available to a person after the death. That means the pension that is given to the family members of the person, and in that case the pension that is available in the case of the family members, it will be taxable under the head income from other sources. All those family members who are receiving the pension of a person after death, so in that case it will be taxable under the head other sources. Now how it will be taxable? We again provide an exemption for the same. Whatever the amount that person receives as an actual amount of your pension, so the amount that will be exempted will be to the extent of 1/3 of the pension. So 1/3 of the pension that those people are receiving, or the 15,000 rupees. So this 15,000 rupees limit is given under this Income Tax Act. So out of these 2 points, whatever being the least will be exempted, and the remaining amount will be taxable in the hand of the remaining family members. Now, another point that is worth to be noted out here is pension from United Nations Organization. So pension from UNO is not and never chargeable to taxes. So that is an important point to be kept into mind, that is any pension that one receives from the UNO, it is not chargeable to taxes. Next is the pension, because it is a after retirement benefit that is given to an employee. So it can be taken up as an uncommuted benefit. That means a benefit that can be taken up in the form of your monthly pension. So you must have seen number of employees going up for the uncommuted pension. That means they receive a monthly amount of, let's say, 10,000, 50,000, 70,000, or let's say 40,000. So whatever amount that they receive as an uncommuted one, being it a government employee, be it a non-government employee, it will be totally taxable in the hands of all those employees, no matter what. So it will be taken up as a totally taxable one amount in the hands of the employee if they are receiving an uncommuted monthly pension. Now next is your commuted pension. Commuted pension is your lump sum amount that you get after the retirement. So this commuted pension in case of your government employees, and here the government employees are defined as in all those employees which are working with the state government, which are working with the central government, which are working with the local authority or any other statutory corporation. So all these categories of your government employees, if they receive any sort of your commuted pension, that means the lump sum amount of your pension, then that pension will be exempted. Now in case of other employees, now let's say those employees which are not government employees, which are working with any organization or any other company or a firm, in that case whatever being your actual amount that you receive as in pension, now out of that your half of the full value of commuted pension will be exempted if the person has not received gratuity. That means if the person is also getting the gratuity as a retirement benefit, in that case the amount that will be exempted will not be half, rather it will be 1/3 of the actual amount received. And in case the person is not receiving the gratuity, in that case half of the full value of your commuted pension. Commuted pension means the lump sum pension, you are not opting for that monthly pension, rather you are going for that lump sum amount. In that case the half value of that full amount of your commuted pension will be exempted and the remaining half will be taxable only if you are not receiving the gratuity. But if you are receiving a gratuity, then in that case 1/3 of the amount will be exempted and the remaining 2/3 will be totally taxable. Now another set of your retirement benefit that you get whenever you retire, because there are number of retirement benefits that a person receives, whether being a government employee or whether being a non-government employee. So he receives number of your retirement benefits. As we discussed, they receive the pension, they receive the gratuity. So another set being is your leave encashment. Now what is leave encashment? This is actually the earned leaves that has been into the credit of a person and he has not taken the leaves during that period of service, and government in consideration of the same will be providing an encashment for all those leaves that have not been taken by the employee in all those years of services. And basically these are your earned leaves that have not been availed or taken by the employee during the service. Now this leave encashment in case of your government employees, it is government employees, whenever we say in this scenario, you would see when we talked about your pension, when we talked about your gratuity, the connotation of government employees changes. Now in case of your gratuity, the connotation of government employees means the central government employees, state government employees, local authority government employees. And when we say the pension, whenever we talk about pension and we talk about commuted pension, the connotation again changes to your central government, state government, local authority and statutory corporation employees. Now further, when we talk about leave encashment, the connotation changes to only your central and the state government employees. So whatever the amount as a leave encashment your the central and the state government employees receives, the entire amount of that particular retirement benefit as in leave encashment will be exempted in the hands of your employees. But let's say it's a non-government employee, in that case what will happen in case of your non-government employees? Whatever being your actual amount received, non-government employee जितना भी actual amount receive कर रहे हैं, the lease will be exempted. Now what will be the lease amount? Number one will be your actual amount that has been received by the employee from the institution, right? That means let us suppose 10 lakh rupees is the actual amount that has been received by the non-government employee, as in you could say leave encashment from the organization. So that amount will be taken up as your actual amount received. Then it is the limit that has been given under your, you could say, the income tax rules. That limit will be taken up. And the third point being your 10 multiplied by average monthly salary. That means जितना भी आपका salary है, and here the salary means your basic salary plus the DA forming part. DA forming part means, again I mention it up, that the component of your DA which is forming a part of your salary component. So that is your DA which is forming part of the salary, plus the commission on percentage basis. So in case a person, let us suppose he is engaged into such services wherein he is providing the sales, and onto those sales he is getting a commission onto the same. So in that case, let us suppose he is giving a sales of, let's say, 10 lakh or 12 lakh rupees, and he is getting a commission of, let's say, 10,000 onto the same. So that 10,000 rupees will again be forming a part of your salary, and commission will be taken up only if that commission is given on percentage basis. If that commission is not given on to percentage basis, then that commission will not be forming a part of your salary, right? Similarly, it says now what will be taken up as the average monthly salary? It says the monthly salary that you receive preceding in the 10 month salary before the retirement. That means retirement होने के 10 महीने से पहले तक जो आप salary receive कर रहे हैं वो salary को consider किया जाएगा, and it will be taken up as an average. That means we'll sum up the salary for all those 10 months and will come for an average monthly salary for the same, and then it will be multiplied by the 10. Fourth point is your leave encashment of leaves in credit in number of months at 30 days leaves in a year for completed year of service. Now this fourth number point, it is worth discussion. That means leave encashment of leaves in number of months. That means what is the total number of leaves that you are holding it up, will be taking it up in, not in terms of your number of days, but in terms of your number of months. For example, at the time of retirement, I am having the leaves into my credit. I will be doing what? I will be converting those number of days that I am having as my, you could say, earned leave. Now that earned leave will be converted into number of days. That means the total number of months, in terms of your number of months that are available with you. Now, what is the maximum amount of your EL that can be taken up, or the EL that can be taken up for the benefit under this leave encashment is your 30 days. That means in a particular year, you cannot take more than 30 days leaves in a year. If you are taking more than 30 days leaves in a year, then the upper capping would prevail. That means let us suppose you are having 40 days leaves, in a year, you are holding it up with yourself. Now, it will be taken it up as what? It will be taken it up as 30 days only, because this is the upper capping under the your act. So that means whatever being your, leaves, EL, it will be just taken it up as maximum of your 30 days leaves in a year, and that too leave encashment of leaves will be done with respect to your number of leaves in terms of your number of months, and then again for the completed year of service. Now when we say completed year of service, again here it means the same as we discussed in case of your gratuity, that completed year of service means, for example, you have served for 29 years, 9 months and let us suppose some 25 days. So in that case, only the completed year of services will be taken it up, right? That means the excess part of months will be not be considered. So keeping all those points into the mind, your leave encashment for the leaves, let's say in terms of number of months will be taking it up, and that too for the 30 days leaves in a year, and that too for a completed year of service will be taking it up. And out of these 4 points, whatever being the least one, it will be exempted, and the rest amount will be taxable in the hands of your non-government employees. I repeat again, that means non-government employees, they are not allowed, they are not eligible to avail the full exemption for your leave encashment. Rather, only these 4 limits would prevail, and out of these 4 conditions, the least one will be exempted and the remaining amount will be totally taxable. So today we discuss about the number of retirement benefits, be it your gratuity. In gratuity we talked about what is the scenario in case of your government employees, what is the scenario in case of your non-government employees. That means those non-government employees which are even covered under the Gratuity Act 1972, and all those employees which are not covered under the Gratuity Act 1972. So the moment the employee is not covered under the Gratuity Act 1972, we are directly taking a half month period, and if an employee is covered under the Gratuity Act, we are taking a period of 15/26, and we are also taking the completed year of services or part in excess of 6 months. That means any service which is given in excess of your 6 months will be taken it up. For example, 25 years and 8 months, it will be taken it up as 26 years of completed services. But when we talk about your non-government employees which are not covered under the Payment of Gratuity Act, then we are only talking about the completed year of services. We are not talking about the excess part. One another major difference is when we are talking about the gratuity for the non-government employees who are covered under the Gratuity Act, for in that scenario we are only considering the monthly salary. But the moment we are talking about those non-government employees who are not covered under the Act, we are taking an average salary, and here the average salary means the salary that is drawn in the last 10 months, and here the last 10 months means what? It means those 10 months before the date of your retirement. So we will be taking up a summation of all that salary which is being drawn in the last 10 months preceding your date of retirement, and we will be doing what? We will be taking an average of the same. That means we will be dividing it by 10 again, right? Similarly, when we talk about pension again we have 3 categorization. One pension is which is received after the death by the family members of the employee. In that case, in those in the hands of those family members, it will be taxable, it will not be entirely exempted, and the amount of exemption that is max to max available in that case will be to the extent of the 1/3 of the pension or 15,000 rupees. Similarly, we talked about that after retirement, if an employee is receiving any pension, that pension could be either in the form of your commuted pension and your uncommuted pension. If it is the uncommuted pension, that means in the case of your monthly pension, right? Similar, so it doesn't matter whether it is a government employee or whether it is a non-government employee, it will be totally taxable in the hands of all those employees, whether the employee pertains to a central government, whether the employee pertains to a state government, it will be taken up as the totally taxable one. So nothing will be given up as an exemption limit. The entire set of amount is taken it up as in you could say a taxable one. That is why at number of instances you must have observed that most of the employees, they prefer for the commuted pension. That means the lump sum amount, be it 10 lakh, whatever being the amount. So they prefer for the same, because government employees especially. So, and here the government employees means the central government, the state government, be it a local authority one, statutory corporation one. In all those scenarios of your government employees, if they receive any commuted pension, the lump sum amount, that entire lump sum amount will be exempted. And in case it is any other employee, that means it is not a government employee, but he is again preferring for the commuted pension, that means a lump sum pension. In that case, whatever being your half a value of the full, you could say, commuted pension, that will be exempted, but only if the person is not receiving the gratuity. But if the person is receiving the gratuity, then only 1/3 of the amount will be exempted, remaining 2/3 will be taxable. Similarly, we talked about the last very element of your retirement benefit, that is your leave encashment. So, in case of your leave encashment, if it is given to a government employee, be it your central government, be it your state government, the entire amount of the, you could say, leave encashment will be exempted, right. So, that is again an, you could say, crucial benefit in case of being a government employee. And supposingly if you are a non-government employee, then we have to again go through the different limits that have been earmarked under the act. So, whatever being the actual amount received, you have to, only a segment of the same will be exempted, not the entire set of amounts will be exempted. So, let us say the actual amount जो भी आपने receive करा है, जो भी limit के अंदर आपको mention है, and then you will be taking it up as a again average monthly salary, as we mentioned in case of your even gratuity. Similarly, out here your average monthly salary, that means the preceding 10 months salary before the date of retirement will be taken up, and for all that set of salary you will be taking it up as an average, and uska average जो है आप निकाल के compute करके you will be multiplying by it 10, and whatever be the amount that comes, that will form your condition number C. That is the third condition. And the fourth condition, as already told, कि leave encashment will be taken up in number of days, in number of months, and that too for the credit of maximum 30 days leaves in a year, and plus on to for completed year of services. So, these are the major three components of your retirement benefit that a person receives at the time of retirement. Apart from this, and another set of elements are there, which are there whenever we talk about salaries, there being the perquisites, there being the contribution towards the PF, right. So, we will be discussing them up in the coming sessions. So, thank you for the day.